Let's be honest, the global economy just feels off, right? I mean, you look around, stocks are through the roof, housing prices are sky high, but there's this weird sense of unease in the air. So today, we're going to be detectives. We're going to follow the clues in the data to try and understand this puzzle. A puzzle that some experts think is pointing to the biggest financial crisis we've ever seen.
Okay, so our first clue, our investigation, it starts in a really unlikely place, Scandinavia. These are countries famous for being super stable, super efficient, but lately they've been sending out some very strange signals.
Now, this isn't some clickbait headline. This warning is coming directly from the Central Bank of Denmark. They're telling their own people to have physical cash ready for essentials, and Sweden's central bank said pretty much the same thing. Look, when countries that are famous for their stability start sounding the alarm like this, you really have to pay attention. This is just not normal.
And that right there, that is the big question we need to answer. When governments that pride themselves on safety and security start putting out warnings like this, you have to ask, what are they seeing behind the curtain that we're not?
So, to figure that out, we can't just go on a hunch or a feeling. No, we need to follow the cold, hard data. And that evidence trail, it starts right in the heart of the global markets. So take a close look at this chart. That last bar way over on the right, that's today's market. And just notice how it's towering over the peak of the 2000.com bubble. Yeah, you heard that right. By this measure, the market is officially more expensive today than it was right before one of the biggest crashes in modern history.
But here's the thing that makes this time really different and kind of scary. See, past crises were usually contained to one area. 1929 was a stock market crash. 2008, that started in the housing market. But this time, both the stock market and the real estate market are in a bubble at the exact same time. We could be facing a double bubble scenario.
And just to see how stretched things have gotten, let's look at a simple number called the price-to-book value. Okay, think of it like this. If a company sold off everything it owns, its buildings, its computers, its inventory, what would it be worth on paper? Well, this number, 5.3x, means that on average, the biggest companies are being valued on the stock market at over 5 times their actual on-paper worth. And here is the real kicker. At the absolute craziest peak of the dot-com mania, a time that is legendary for being overvalued, that number was only 5.1. We are officially in more expensive territory right now than we were then. That should be setting off all sorts of alarm bells. Okay, now let's look at another one, the price-to-earnings ratio. This basically asks a simple question. How many years of profit would it take for the company to earn back what you just paid for one share of its stock? Well, for about a third of the S&P 500, the answer is 50 years. And for some of those really popular tech stocks, you'd be waiting for centuries. I mean, come on, that's not investing anymore. That's buying a lottery ticket.
So the data is just screaming that everything is historically expensive, which leads to a really critical question. Who on earth is still buying this stuff? And the answer, it reveals this fascinating and deeply concerning split in the market. In the world of finance, they have these terms for the two main groups. First, you have smart money. These are the big players, the hedge funds, the pension funds, the sophisticated institutions. And then you have what they call, and it's a pretty harsh term, dumb money, which is basically everyday people, retail investors. Us. This chart from Goldman Sachs shows that split perfectly. Just look at that huge bar on the left. That's the retail investors, the public, buying stocks in absolutely record amounts. Now look at that tiny little bar on the right. That's the institutional smart money. They're doing the exact opposite. They are selling. They are quietly getting out while the public rushes in. And if that isn't convincing enough for you, let's look at the ultimate insiders. We're talking about the CEOs and top executives, the people who know their companies better than anyone else on the planet. Among the top 200 of them, the number of buy orders they've placed for their own stock is 0. Not a single one is buying shares at these prices. 0. So, what does this all add up to? You've got these strange warnings, valuations that are completely through the roof, and the insiders selling to the public. Well, one analyst, Jim Rickards, who has a knack for predicting these kinds of crises, he has a theory that ties it all together. And he says it's a historical pattern, one that's repeating itself right now, right in front of our eyes. Rickards calls this the everything bubble. And he says, yeah, it looks like a boom, it absolutely feels like prosperity, but it's actually an illusion that's created by a very predictable cycle of human psychology. So Rickards lays out these 4 classic phases of any bubble. It always starts with the stealth phase, where the smart money gets in early and buys quietly. Then comes the awareness phase, as other big institutions start to catch on. And then you get phase 3, the mania phase. This is where the public rushes in, driven by a massive fear of missing out. And the final stage, that's the dump phase, where the smart money sells everything they bought at the top to that same frenzied public. So the million-dollar question is, where are we in this cycle right now? Well, all the signs we just looked at, they all point to phase 3, mania. FOMO is everywhere, valuations are at historic highs, and the risk is crazy concentrated, with just 10 AI stocks making up a third of the S&P 500. But here's the most crucial part. The data shows the smart money is already in phase 4. They're dumping their shares. And that brings us to the final, and let's be real, the most important part of our whole investigation. If we actually are in the final stages of a massive everything bubble, what happens next? See, the most dangerous thing about a financial crisis is that it doesn't send out an invitation. There's no warning siren. The system feels perfectly fine, perfectly normal, right up until the exact moment it completely shatters. It often just takes one small, unexpected event to trigger an absolute avalanche. So when you boil it all down, what does this mean? It means our entire global financial system is built on one very fragile foundation: confidence. And when that confidence breaks, it breaks fast. The data we've looked at strongly suggests the risk right now is incredibly high. Now, this isn't about predicting the exact day or time the sky will fall. It's about being aware of the environment we're in. And that really brings us to the final question. This isn't about what central banks or hedge funds are going to do. It's a question for every single one of us to think about. Looking at all this evidence laid out, if this really is the everything bubble, and if it finally pops, are you prepared?